Hi and welcome to the Market Alert for Thursday, the 20th of May 2021. So the main news for yesterday morning, 7 a.m, was the inflation figures, and UK inflation rate more than doubles in April. Well, what a surprise, eh? If you followed along in the Market Alert, you'll know that this is a global thing that's occurring, and it's only going to get worse as well. We've been talking about this for a long time. That sent the market low, which we'll look at in just a moment. In the US, crypto, crude, and crappy stock dump and pump as Fed sparks dollar spike. Again, we'll come to that as we look at the precious metals markets in the US dollar in isolation later. In the past 7 sessions, stocks have suffered 3 of the largest bouts of concentrated selling pressure in history. And I mentioned this yesterday about how violent the sideways move is. This is characteristic of a market top, and it's going to get worse. Everything is crashing. Stocks and bonds, crypto, commodities all tumble. Any tightening on the Fed end would be a punch in the market's face, but we know that the Fed will do its best to prevent that from happening. Yeah, it's called the Fed put. They'll do whatever they can until they can't. Peter Schiff warns Tucker Carlson of Fox News the coming financial crisis will be worse than the pandemic. I actually wrote to a friend last year about this, and he was on about the pandemic and the hospitals, etc. And yes, I accept that, but I said that, to be honest with you, I am far more worried about the end game of the fiat currencies and how this is actually going to play into that. And the reply I got is not repeatable on here. But again, it's I'll be proven right on it. I don't take any sort of pleasure in that, it's not rocket science. If you don't actually invest time in looking at what's actually going on in the financial system, it's the biggest thing in the world. And people are just sleepwalking into a major catastrophe coming down the line. It's been delayed since 2008 to where we are currently. But they can, keep delaying this, kicking the can down the road. It's become an art for these people. Yeah. So Fed alert, overnight reverse repo usage soars above COVID highs. The Fed is taking treasuries out of the market through the QE purchases. That's 120 billion a month, and putting them right back via the RRP. I'm not going to go into that in this video, but we will at some point. You can't make this up. Stocks panic bid reverse losses after Fed hints at taper. This is the new thing now, the taper. What I mean by tapering is actually we're not going to print 120 billion a month to keep this smoke and mirrors illusion alive. That's what it means. It might be appropriate at some point in up and coming meetings to begin to discussing a plan for adjusting the pace of asset purchases, i.e. buying toxic debt from corporations and bond purchases from corporations. We had this before. 2018 they attempted this, and the whole thing started to fall apart, and they had no choice other than to come straight back in. Unfortunately for them now, that we've got an inflation problem as well that's going to put pressure on raising rates, let alone tapering. So, we are in the sort of the end game, as it were. Stale FOMC minute spook market as number of participants want to taper, discussion to begin soon. What we got here, a couple of participants remarked that should investors' risk appetite fall, an associated drop in asset prices coupled with the high business and financial leverage could have adverse implications for the real economy. Of course it's going to. Like I say, this is all just smoke and mirrors. We got here, FOMC, this was the preview, insight into substantial further progress. The minutes could give some further insight into the debate around the progress on the Fed's goal and timeline to purchase tapering, whilst other policy matters such as tweaks to administered rates. I like this. Tweaks to administered rates. There's if they even attempt to put rates up by 0.25%, the market goes south. Certainly on a temporary basis until they buy back and then come in and support it, just as they did yesterday. Now I just need to add a couple of other things here. This is the implied volatility. We're up to 1635 from 1529. You'll see why in just a moment. And on the color-coded version, you'll see we're back into the red territory there. But not surprising, given how violent the market is on an intraday basis. I think that's the DAX, this is the Dow. So yesterday you can see that prices trading lower from here to here. We'll just draw this in and you'll see the market trading back to 78%. Exactly the same for the German DAX. I did draw this in yesterday but forgot to save it. So yeah, again, you know, the Fed to the rescue, the plunge protection team to the rescue. Let's sell the VIX, let's buy the S&P futures, and let's bring the market back. And that's exactly what they're going to do, because that's how it's worked for the last 13 years, and they're going to keep on doing this crap until they can no longer do it and keep the illusion alive that all is well. But look at the volatility over the last few days. You can see that there's something wrong. Everybody wants to sell. They try and sell at the open, and the market is brought back. It's great to trade. You just wait for the market to settle and then catch the ride back. So, you know, I'm not bothered how long this goes on, because the pattern is so predictable and has been for so long. Yesterday afternoon, we see exactly this. We sell, we retest, and then we bring it back. This is the Fed not wanting to taper or talk about tapering or anything else. But you can see exactly what happens, and then the market's brought back. We get this all the time. This is how it's been for the last 13 years when we have an FOMC meeting. It'll be the same when they actually taper. We'll get the market falling out of bed. I think it was August 2018. I know it. I mean, look, if you go to the channel, every single video is there. Everything that I've forecast, everything I've talked about is there. There's 1,200 videos. And you'll see, I think it was January 2018, and then something happened in August of 2018 as well, when we saw the tapering. In fact, let me just have a quick look in here. Let's go to the weekly chart and just scroll back to 2018. That's 15, 16. Perhaps it was in 16 then. 2016 looks like. Yeah, there you go, February and January, that was it. So it was January 16, blimey, the time flies by. I think that's the last time they attempted it, but I know there was something in 2018 as well. So let's just have a quick look. There it is, yeah, it was 2018. Okay. Yeah, that's right, January 2018. And you can see what happened when the Fed tried to taper. And you can see again in October, the same thing there. This is what happens when you try to stop printing 120 billion a month and it making its way into the stock market. This is exactly, and again you see that violent move. We've got these violent sideways ranges, and then you can see how the market fell there, and that's what we're at the moment as well. This is a few weeks ago. Sorry, this is not a few weeks ago. This is a weekly chart. This is last year. You see how the market's been brought back. I mean, we haven't even got going yet, have we? When you look at this is on the weekly chart, this is weekly volatility. Just go back to 2018 again, just so you can see this. You can see how much more volatile the trading was then. So, yeah, there's a lot more pickup in volatility to come. In the German DAX, similar picture. If I can just grab the chart again. We've got... this is yesterday. They bring the market off the lows. You can see where it's closed. Traded down to the 78% retracement that we drew in yesterday from this low to this high. So that's where we are with the DAX. I didn't want to do that, so let me just put that back. And what I want to add in here, I'll get there in a second. Just remove this so it looks a bit cleaner. Down to 78% as we drew in yesterday. That was the S3 in the intraday. And then from this high to this low, what does the market got to offer as far as strength to the upside? Well, we're through 38 and we're heading for 50. So let's get rid of the 38. Keep an eye on these numbers just in case the market starts to make its way back during today. And also when we get to this area, of 89, this is going to be crucial. So if the market manages to make its way up to this area, this is the new all-time high, and we get a failure here, that's when we could really see things start to go south. So it's very important to have these figures on the chart, also have these in the intraday charts as well. So yesterday morning we got the inflation figures. They were out at 7 a.m. and the market initially, if we just move this across, we just activate this, we just move this across. Initially the market was quite responsive about this, and then all of a sudden when we opened in the cash market, the DAX, the FTSE all moved south very sharply there. We had a bit of a bounce, and then the market became sideways, which you can see there. Traded like this for most of the morning in a range, and then proceeded to move lower. Mid-morning prices moving back. There were a few trades, obviously straight from the start. There was a losing trade here because the market stopped it out before it even got going, and then we went short again to make this up. Prices drifting down all the way down to, as I say, down to the S3. In the afternoon, the market opened. We started off with a buy signal. This was hit immediately with more selling than we had buying, in the range narrower, so some serious selling going on there. And then the market traded sideways for some time before trading down to the S3, which tied in with the 78% retracement, which I spoke about in yesterday's market alert as being the major area. And again, classic, we saw the Dow do exactly the same. Market then reverses and then starts to trade all the way back, which is what we saw. And then of course you've got the FOMC minutes, or well, say the minutes. You got absolutely nothing from Powell with regards to the tapering, and the market then up and down before overnight. So let's have a look where we are now. We've got the market trying to scream back to the upside by the looks of things. We've got the DP here, the purple line daily pivot. The market trying to stay above this at the moment. Let's just squeeze this up a bit more. Market staying above the 200 MA and the DP at the moment. The high is within 150 points. The low is a lot further away, of course, because of yesterday's low at the S3, which to get to the low is 100, 200, 250. So 150 to the high of yesterday to stop it being an inside bar, and 250 down to the low. So let's just reset the chart and have a look. So the market at the moment, bit of a sideways move going on from the last area here where prices have been sideways, and a bit of a pullback there. Wait and see what the futures market does when it opens. Now let's move on to the metals. This was very interesting yesterday morning as well, and get the charts. Here we go. Let's just go down to the 5-minute chart, drag this over to yesterday morning, and you will see that silver started to move higher, and yours truly couldn't understand why, because at this point the market alert was just rendering, the video was rendering, and silver started to move to the upside. And of course, again, this ties in with this inflation doubling in the month of April. And there we go. And then that was short-lived, and they brought it back 78%, stuck at the 200 MA in the 5-minute chart, and you can see what they did for the rest of the morning. And then we got to the afternoon, and the market came back, and then they decided they'd monkey hammer it down to 27.50. Great area to buy this. And then again in the overnight, look what they've done. Exactly the same. Brought it back, huge volumes, and now moved the market back towards the $28. But look what's happened here. We've just met some more selling. So I'm going to look at the 27.50 area to try and add to a position. We'll have to break the DP level first, but you can see there's some selling around there at the moment. But on the daily chart, you can see again they managed to bring the market off the low, and we're moving up off that 27.50 At the moment, looks like it could be retested though. And the reason for this yesterday is that, as we spoke of, the US dollar, the inverse relationship, the dollar coming back, that hammered the cryptos. And again, the cryptos is not a speculative, well, it is a speculative bubble, but the rise in price, what a lot of people are missing is that Bitcoin is traded against the US dollar. So as the US dollar has dropped, the value of Bitcoin has risen. Whereas yesterday, when the dollar started to rise, it was an opportunity to monkey hammer the price of Bitcoin and the cryptos down. Of course, that will change as the dollar resumes its downward trajectory and the bear market, and actually take out the 89.66, get through this. That will be great, because then we'll start to see gold and silver then accelerate to the upside as well, and so will Bitcoin, for the basic reason of it being an inverse relationship to the US dollar. Again, not rocket science. I mean, it has got a lot more volatility and speculation, of course, but ultimately that's the relationship. So you'd expect Bitcoin to go up purely and simply, even without the volatility, because the US dollar is playing its end game as we record. Right, that will do it for today. I think I've covered everything apart from the news. So quick look today. We've got Philly Fed and unemployment claims from the US. All of this is at 1:30. That will be done and dusted before the Dow opens at 2:30. Okay, that's it. It's a bit of a long one, but a lot of news to cover, a lot going on. And as ever, thanks for watching. See you in the next one.